Today, we're digging into a market that's telling two completely different stories at the exact same time. We're taking a snapshot of the global diamond industry, and it's a place that is somehow both booming and busting. All right, let's get right into this, because the picture of the diamond market in March 2026 is, well, it's complicated. What we're seeing isn't just one story. It's really two totally different narratives playing out all across the globe. The single most important thing to understand right now is this fundamental split. It's creating two very different realities inside the very same industry. So you can forget about thinking of it as the diamond market. Right now, we really have to think about diamond markets, plural. So that's the big question, right? How is this even possible? This is the paradox we're going to unpack. And the answer, as you'll see, reveals these huge forces that are reshaping this entire billion-dollar trade. It pretty much boils down to two major pressures. First, there's a massive split based on what kind of diamond you're trying to sell. And second, there's the long shadow of geopolitical conflict, which is hitting everything from market confidence to the simple logistics of moving people and gems around. So let's break that down, starting with this idea of winners and losers. Because in this new environment, it's a classic tale of the haves and the have-nots. But in this case, it's all about carats. And this just lays it out perfectly. On one side, you have the market for the big, high-quality stuff. We're talking 2 carats and up. That market is holding strong, prices are firm, demand is steady. But look at the other side. The market for all those smaller stones, it's getting much, much weaker. And what's so interesting is how the major retailers are dealing with this. The CEO of Signet, one of the biggest jewelers in the world, basically spells out the new playbook. He sees 2 totally separate paths forward. One for high-end, luxury natural diamonds, and a completely different one for lab-grown stones in everyday fashion pieces. And you can actually see this playing out in the numbers. Take a look at Signet. Their sales are basically flat, but their average selling price is up 4 to 5%. Why? Because they're focusing on that higher value, more stable part of the market. Now contrast that with Brilliant Earth. They saw a sales bump, but still posted a loss, a sure sign of the pressure in that other market segment. Okay, so it's not just about size. This is a crucial point. It's also about the actual shape of the diamond. And this is where the market gets really, really specific. First, just a super quick definition so we're all on the same page. When we talk about fancy shapes, we just mean any diamond that isn't cut into that classic round shape that probably pops into your head first. Simple as that. And right now, these fancy shapes are almost a market of their own. These longer, elongated shapes, think ovals and emerald cuts, are actually doing better than rounds. The absolute best cuts of marquise, radiant, and cushion diamonds are hard to find. But then you have other shapes, like the princess cut, that are just really struggling. I mean, the demand is so specific that these long, cushion-cut diamonds are selling for a whopping 20 to 25% more than their square-shaped cousins. That is a huge premium for what is basically just a change in proportions. But it really is a game of millimeters. It all comes down to a simple truth in today's market. If you have a beautifully cut, desirable fancy shape, it's a hot commodity. But if you have one with bad proportions, good luck. It's nearly impossible to sell. It just becomes illiquid. Okay, so now let's take a quick trip around the world and see how these different forces are hitting the major diamond hubs, from the biggest consumers to the biggest cutters. And first stop, the biggest consumer market on the planet, the United States. And what do we see here? Well, it's our whole story playing out in a single country. The big-time players who deal in those large 2-carat-plus stones, they're seeing steady, reliable demand. But the smaller dealers, who are probably handling the smaller goods, they're the ones really feeling the pain of this softening market. It's a perfect microcosm. Next, let's jump across the pond to Europe, to the historic diamond trading center of Antwerp in Belgium. Okay, the data here is really fascinating. Even with all the worries about conflict messing up supply chains, polished exports, that's finished diamonds leaving the country, are actually up 7%. But the real story is the huge drop in rough diamond imports. They're down a massive 17%. What that tells us is that traders are selling off their existing inventory instead of buying new rough stones. That's a huge sign of caution. Now, the situation in Israel's diamond exchange, another key trading hub, is a totally different story. Here, the impact of the regional conflict is incredibly direct and severe. The war has just dramatically slowed everything down. We're talking limited flights, closed airspace, and very few traders even showing up to the exchange floor. Business has pretty much ground to a halt. And now, let's head to the world's cutting and polishing powerhouse, India. And the mood here, well, it's one of extreme caution. All this global uncertainty, it means the manufacturers are not taking any risks. They are basically only cutting stones that they already have a guaranteed buyer for. In other words, nobody's building up inventory. They're only filling specific orders, reacting directly to those divided demand signals we've been talking about. So we've seen this split in company earnings, in consumer taste for shapes, and all across the world's trading hubs. So what's the big takeaway? What does this all mean for the future of the diamond? The market is clearly splitting into two distinct lanes. And the crucial question is this a temporary thing, or is this a permanent restructuring of the entire industry? Are we watching as large natural diamonds get cemented as a pure luxury good, something to mark a huge moment to become an heirloom, while the more accessible everyday fashion world gets left completely to their lab-grown alternatives? That is the multi-billion-dollar question.